And today I want to welcome our special guest to today's presentation. He'll be going through, and while the presentation is going, if you have any questions, we'll be doing a question and answer session right at the very end. So make sure you write down your questions, and we'll take those right at the end for you. So without further ado, today's presentation is given by Rich Maiolio. He is the Director of Business Development at Capital Review Group. And what he does is he works with his clients to help them identify potential tax savings. He provides analysis of that to help them determine the feasibility of taking advantage of those tax incentives and then taking advantage of those saving opportunities. So without further ado, Rich, I will turn it over to you.
Thank you very much, and welcome everyone. What I'd like to do today is talk about two particular opportunities that are available to architectural and engineering firms, and also to look at what the future of these initiatives are. The first one we're going to be talking about is the Research and Development Tax Credit. We like to refer to it as the Research Tax Credit. For when we talk to architectural and engineering firms. The second one is under the Energy Policy Act of 2005. It's the Internal Revenue Code, Section 179D. And at the end, we're going to take a look at what the updates possibly will be for these. So I'd like to start again with the Research Tax Credit and give you a little history. It was created in 1981, and the incentive was designed to encourage the development of new and improved products and processes and software here in the United States. It has been renewed for 2 years at a time for a number of years, right straight through until the end of last year. And that was part of the tax extension package that was processed in December, and it went retroactive back to the 1st of 2014. There are certain things that must meet what's called the four-part test for a firm to take the tax credits. And we'll be going over those four things and look particularly at how they relate to architectural and engineering firms. The first is the permitted purpose, the intention of creating an improved product or process or software. Just remember, these are all general, and when we get into the specifics, you can probably relate a little more to it. Certainly, it has to be technical in nature. It relies on the engineering, biology, physics, or computer science. There has to be a certain amount of uncertainty in the research, in capability, method, design, process, or cost. And fourthly, there needs to be some experimentation to eliminate these uncertainties. And usually that's through testing, evaluating the alternatives, and oftentimes through trial and error. The interesting thing about the research tax credit, up until 2003, it was not a recommended tax opportunity for engineering and architectural firms. There was something called a discovery test, and that applied particularly to manufacturing and software companies. And that was repealed, and when that was repealed, it opened up these credits to architectural and engineering firms. Here's a overview of the activities and costs that will qualify for R&D tax credits. And I think I should mention it is a tax credit, and there is a difference between a tax credit and a tax deduction. This particular opportunity is a credit which goes directly to the bottom line of your tax filing. So if we find that there's $160,000 in tax credits by doing a qualified study, then that reduces your taxes in that particular year for $163,000. The opportunities that we look at are the determination of a business need, the conception of an idea, design, prototype development and testing, manufacturing process and development, testing and trial runs, and commercial production. You should note at this time that it's any costs that are involved with supervising or supporting any of these activities also qualifies as a research expense. Now, what does this mean for architectural and engineering firms? What activities that you do on a daily basis and oftentimes just take as, this is what we do as part of our business. This is how we go from the start of a project right into construction. And one of the things that we have found is that a lot of the architectural engineering firms who are doing research to develop a project are not realizing that they are doing it and that those activities will qualify. So here are some that we can go over. Identifying issues that are related to functionality, reliability, quality, and performance. A lot of that has to do with HVAC systems, roofing systems, fire protection, that kind of thing. Are they related, and are they functional? Are they reliable? Is the quality good? And do they perform in a way that is efficient and cost effective? The architectural design to deal with client requirements. For instance, if you're designing a school, is it going to be a place that kids can actually learn in? Is it going to be functional? Is there a flow that makes sense for the educational process? If it's a municipal, you have to look at municipal codes, obviously, both for structure and energy, and site conditions and climate. So any of the activities that are related to the design of any of those things can qualify for the tax credit. Okay, if you're talking about incorporating a new design or construction techniques that are different than the norm, things like green roofs, solar energy, geothermal energy, particular kinds of lighting, those kinds of things that would be incorporated into the design that are new. Are there new construction techniques? Are there ways that they're going to approach the construction that is unique or different than what's normally accepted? Obviously, if you're performing engineering calculations to determine the efficiencies or whether something meets code, then those activities are considered eligible. And of course, you're going to evaluate and test designs, the modeling, computational analysis, and other means. If you're designing something for a client, oftentimes your first presentation is not the one that's accepted. There's always modifications and changes that are made through the design process. And again, those changes may require testing and modeling to determine whether they meet the client's needs. And then, of course, performing construction planning is something that would also qualify. Okay, what are the methods for capturing the R&D credits? The IRS has two methods that they approve. The first, and the one that we prefer, is the project accounting method. And because it allows us to get more detail and more specific as the activities relate to specific projects. And we do that through timesheets and also primarily with interviews with team leaders for a particular project. We also look at any invoices for any things that have been added to your company's equipment to make the process go a little smoother or help in the research part of the project. The second one is called a hybrid method, And what it does, rather than looking at particular projects, it looks at an overall cost center without consideration for the work done on specific projects. It's used mostly by the service providers who provide research and development tax credit studies, the big four, smaller national CPA firms, and some of the specialty firms. Our approach is a little different than that. As I said, it's the project accounting. And the reason why we don't use the hybrid is because the methodology is often attacked by the IRS and most state auditors. At this time, I guess I should mention that many of the states also adopt research tax credits and use the federal guidelines, but some states don't, and some states also have their own guidelines, but we're well versed in that, so we know what states you can apply for and how you apply for the state credits. As again I said, we don't recommend the hybrid method. We find that it's not as defendable as the project accounting method. Okay, here's a case study of an architectural firm. We did this recently for a firm that designed both public and private commercial projects. And we looked at the past 3 years. And what we found is in the first year, there were several projects that did qualify. Some were complete construction projects, some were improvements, and some were additions. And that's the case in all 3 years. So it's not limited just to new construction. And the first year we found 87,000 plus in tax credits. And the second year, there was a little less that qualified. Some of the projects overlapped. They had just begun, hadn't been finished, so there weren't a lot of credits there. And then in the third year in 2014, we found $55,000 in tax credits. And that's for a total of $163,000 in federal tax credits over the course of 3 years. Now, the interesting thing about the credits is that if they're not used in any year, or the year that they were earned, they can be carried forward into future years. So if you're looking at 2012 and you had a tax obligation of $50,000 as an example, you can carry forward that $37,000 into the next year and until it's fully exhausted, and the same is true for the future. Here's an engineering and construction project that we looked at, and we looked at design and engineering, product development, product technology development, architecture, and construction. This particular firm was able to get over 8 figures of federal and state research credit, and they were audited, and the IRS accepted over 95% of that 8-figure research credit claim. And so this is where the accounting method that we use to capture the credits proved to be very successful and certainly acceptable by the IRS. Okay, there are certain things that we request to prepare a preliminary estimate of what we call research and experimentation. What we ask for first is a payroll report for the last 4 tax years. Now, usually that can be gotten from your HR department, or if you're using a provider to do your payroll from them. Now, one of the things that always is a concern for our clients is, well, actually there are several when we first talk about research and development. The first is, are we a big enough company to qualify? Does it make sense in terms of return on an investment for the expense that's involved with creating the report? Secondly, we don't have the time to spend gathering the information that you may be requesting and so it doesn't make sense to us. And thirdly, why do we want to go ahead and do this? Does it make sense from a tax point of view? We may not have had a high tax liability in previous years. Well, when we do the estimate, we talk about those considerations, and we also discuss that with your tax CPA firm. We also look for trial balances for the 4 previous years, federal and state tax returns for the business shareholders and partners for the 4 previous years, a project list of those projects worked on in the last 4 years, the project cost summary for all the projects on the list, and then any additions to your fixed asset schedule. Did you need new equipment? Did you have to get certain things to do your research or do your test and evaluation? All of those activities and more will qualify for the benefits. What do we do with this information? We collect it, obviously, and the first thing we do is analyze it to determine if a study would make sense. If so, we prepare an estimate of the potential benefits and an estimate of the expense for preparing the study, and we present that to the client. At this point, there's no cost to the client. What we do then is have a discussion with their CPA firm and the client, and we review our estimates and we answer any questions. If at that point it's decided that we go ahead with a study, we would submit an agreement to conduct a study to the client. The client would then sign the agreement and return it to us, and then we would start the interviews with team leaders and collect more detailed information about individual projects that are in the scope of the 3 or 4 years that we're looking at. We analyze those particular findings, and then we review them and prepare a report. We review the report, we prepare the report, and then we present it to the client and the CPA firm, and we answer any questions. And then the client files for the tax credits, and they can do that one of 2 ways. They can file for the tax credits when they do their annual filing, or they can do an amendment to the future or past tax filings immediately and take those credits and bring them forward. So that's basically an overview of the research and development tax credit for architectural engineering firms. And as Angela said, we'll be answering any questions that you might have after we go through the second part of this. So we'll move into the second part now, and the Energy Policy Act of 2005, we refer it to as 179D tax deductions. Now, what exactly is that? Well, many of you may have taken the opportunity to take advantage of the Energy Policy Act itself in your own homes when you put in new HVAC equipment that met certain efficiency standards, when you put a new roof on, when you did lighting systems, whatever it was that improved the energy, you may have gotten a tax credit individually for your own homes. In 2006, this was extended, the 179D was extended to commercial building owners. And the effective dates were from January 1st, 2006 to the end of last year, 12/31/14. And what were the energy efficiencies that were considered for commercial level? That they were lighting system, the HVAC and hot water system, and the building envelope. Now, they can be considered individually or it can be considered as a whole building. And what we normally do is we will look at a project from a whole building point of view, particularly with new construction. and improvements. And the reason for that is that the initial legislation required a 16 2/3% increase in efficiency over the ASHRAE 2001 standard. And if you're considering the whole building, you are able to, for instance, if the envelope was 14%, it would not individually meet the requirements for the envelope. But if the lighting system was 22%, you could combine that with the envelope. And also, if the HVAC system exceeded the ASHRAE standards, as long as you got to 50% for the whole building, then you can use each of the individuals to support the others. And again, we're looking at standards of ASHRAE 2001, and our experience is that almost all projects that were completed or designed in 2006 usually exceeded the ASHRAE 2001 standards. The deduction for each of them is 60 cents per square foot or $1.80 for a whole building. Now, we've looked at projects that have had lighting and HVAC qualified, but not the envelope, and those were able to get $1.20 per square foot for the building. Okay, who may qualify for the tax deductions? Commercial properties for retrofit improvements and new construction or tenant-owned assets. So basically what we're talking about is the owner of the assets may take the deduction. So if you have a commercial project, say a shopping center, and a new tenant comes in and they do the build out for their particular use, even though it's located in a owned facility owned by someone else, that as a tenant, because they paid for those improvements or assets, they're able to take the deduction. Now, this is the part that applies particularly to architectural firms, public buildings, government, federal, state, county, municipal, etc., which have implemented energy efficiencies while tax exempt, may allocate the deduction to the primary designers and architects, lighting designers, mechanical engineers, etc. Now, this was an addition to the Energy Policy Act, Section 179B, that came through in 2008 when the legislation was extended. So at that point, architects and engineers could look at their governmental projects to determine whether they met the qualifications to take the tax deductions. Okay, for test for qualifying projects. Again, we do this at no cost to the client to let them know if their project will qualify. And we'll look at it from a number of ways to determine, first of all, if the potential is there for the project to qualify. The first was it placed in service between 2006 and 2014. And when we're talking about placed in service, we usually look at a certificate of occupancy. However, in some situations, we can look at a project that has those three systems, the building envelope, the lighting, and the HVAC systems, completed within this time period, even though there may not be a certificate of occupancy given in that time period, as long as those assets have been completed and are functioning. Was it installed in the U.S. or in U.S. territories? Was it within the project, was in the scope of ASHRAE 2001? And is it new construction, an improvement, or renovations for commercial buildings or high-rise residential buildings? And when we say high-rise residential buildings, what we're talking about is 4 floors above grade So anything below that, 3/4 or less in residential commercial buildings is considered under another tax code. Okay, what does not qualify? Well, currently 501s, any 501s, and there's a myriad of definitions for 501s, but basically any not-for-profits. They don't pay taxes and they can't allocate the tax deductions to the designer, primary designer. Sovereign nations. So if they're, for instance, have a embassy in this country that's energy efficient, they cannot take the tax deductions. Again, this is a tax deduction, not a credit. And the difference between a tax deduction and a credit is that if you have $100,000 in tax credits, that goes right to the bottom line and is taken off your taxes. If you have $100,000 in tax deductions, you need to calculate your tax bracket. For instance, if you're in a 35% tax bracket, then you have $35,000 that goes to the bottom line and reduces your taxes by that much. Okay, what's the status of a commercial property owner? One is usually anticipating a tax liability or has a tax liability. The deduction can be carried forward again up to 20 years. So if they're not, it's a new construction. Obviously, if it's a commercial apartment complex that's not fully occupied, or if it's a office building that's not fully occupied, they may not have a profit for the year in which it was taken, but in future years they're expecting to have a profit. So the tax deduction can be carried forward until it's fully exhausted. If you pay taxes in the year in which the construction or retrofit or improvement was put into service, in this case the tax benefit may be applied to current or future tax years. And if it's applied to past tax years, the owner of the building can get a refund from the IRS for taxes that were overpaid in previous years when the study had not been completed. For private sector owner, the assets may go back in time, even though through the years from the beginning of the legislation, and brought forward to catch up on the missed deduction. This is a simple accounting process, and it's called preparing a 3115 or 3115 change of accounting method form. For primary designers, architects, and engineers, or electrical contractors, as public buildings may only go back to open years, or generally 3 years from the date of filing. Now, to take a look at that, if you had a project in 2009, it generally would not qualify unless you amended that in future years, and that would make that an open year. Say, for instance, you amended that in 2012, then you would be still eligible to take that benefit. But that's an exception. Generally, we go back 2000 for 3 years. So in this case, it would be back to 2012, or in some cases 2011, depending on when you filed your taxes. If you were on extension, then the date of filing is used. So if you were filing in September or October of this year for 2014, then you can go back to 2011 and look at those projects. How is the benefit determined? We look at lighting as standalone. That's called the interim rule. The analysis determines whether the watts per square foot and the necessary controls are present. Now, bi-level switching is considered the necessary control. And obviously there are many ways to achieve bi-level switching. And for example, if you have 2 manual switches, if you have ambient light sensors, if if you can at any time go from full lighting to partial lighting. And that would be by level switching. If you go, for instance, with an occupancy sensor, it turns all of the lighting on when someone enters the room, it turns all of the lighting off when someone exits the room, that is not considered bi-level switching. That's either full on or full off. So that's a consideration when we're looking at lighting. For HVAC or envelope or whole building, we are required to use an IRS approved software program and to determine which systems qualify for the deductions. We collect the information for a project and put that information into the software to determine whether they meet the standards. What's needed to determine the lighting benefit, square footage of the proposed or installed project. And it's interesting that if it's proposed, we will still do a benefit analysis for a project even though it hasn't been completed. And one of the things that is helpful in selling a project is knowing that there is the potential for tax benefits if they accept your proposal. So we encourage our architectural and engineering firms to have us look at the project and then give an estimate of what the benefits would be. And they can incorporate that into their proposal, which may give them a leg up on the competition for projects. And the same is true also with whole building. The specific use of the property. Each property in the standards has a particular watts per square foot definition. For instance, a medical office building is different than a warehouse. The number of fixtures of the proposed or installed project, the watts per fixture, the cost of the proposed or installed project, and the amount of the rebate. Now, with commercial clients, the rebate limits the amount of deduction. For instance, if there's a $100,000 lighting improvement or retrofit and there's $50,000 in rebate, the only amount of deduction that would be able to be taken would be the $50,000 because that's what was their out-of-pocket cost. And of course, the date of the proposed installed project has to fall within the limits of the legislation between 2006 and 2014. What's needed for HVAC, whole building, envelope? Square footage again, plans and drawings, submittals and specifications, the date of the project, retrofit or improvements were put into service, the cost of the project, the amount of rebate, and let me go back here. The interesting thing about architects and engineers is that if they're doing, for instance, a municipal project that was given a rebate by a local utility, it does not affect the amount of the deduction that an architectural or engineering firm can take. So if it was a $100,000 lighting project and there was a $50,000 rebate, the architectural firm can take the $100,000 in tax deductions. That's an important benefit. Okay, what's the project certification process? First of all, the IRS requires a third party to model the project and conduct a qualifying site visit. And those are the two things that our company does. We are well versed in project modeling, and we have engineers throughout the country that will go on site to qualify. What the IRS wants to make sure here is that people aren't auditing themselves and then making a statement that they did meet the qualifications, whether they have or not. And also that the third party go to make sure that what was designed was actually installed in the property. We had a case once where a lighting company installed or designed lighting and then when we went to look at installation, we found that what they designed was not actually installed, so we couldn't qualify the project. Very rare occasion that that happens, but that's what the IRS is trying to prevent from happening. Uh, we have a discussion with the client or the client's representative regarding the scope of the project. Uh, if the project seems to make sense from our point of view, we then discuss with the client's tax advisor, and we involve our director of taxation to ensure that the client may take and use the deduction. For lighting only, the determination that the project qualifies, and then we prepare a certification agreement with the provider. For HVAC and envelope and whole building, for a new client, we ask them to sign a letter of intent, which tells them that there's no cost involved in us reviewing the project and to make sure that it qualifies. Should it not qualify, then there's no cost. But the letter of intent also asks that we don't have another company or provider for the service reviewing the project at the same time, and that if the project qualifies and makes sense from a tax point of view for the client, that they use us to do the certification. So we make an investment to review the project and determine the benefits, the actual benefits, before we actually do the study, and we present that to the client. Okay, for the primary designer, one of the things that's required is that the governmental agency will allocate the deduction for the tax benefits to the primary designer. Now, many of the governmental agencies, particularly on the federal level, have mandated to the various agencies on the federal level that they do assign or allocate the deduction. On a local level, it's up to the local individual. We encourage our clients to talk to the agency prior to the process to determine whether they're interested in providing that allocation. And I would say that 90% of them do it freely. And there is a particular form that they will be asked to sign that's included in the report at the end of the certification process. They also get a copy of that report to see how the efficiencies will affect their use of the building in the future. Here's a case study for a primary designer. This was an elementary school that did qualify for a whole building, and the date of service was 11/2013, well within the range. The cost of the building was $23 million. It was 63,000 square feet, and the deduction was $113,400. Very attractive building when it was completed, some very unique things that also could qualify for research and development tax credits. This school was proposed for the future. As I said, both of these opportunities ended in 2014, but you're still eligible to go back and look at projects that were completed or put substantially in service before the end of 2014. What's happened this summer, the Senate committee voted to extend or both, along with a number of other tax opportunities, to the end of 2016. That was the Senate committee. And additionally, they would allow eligible small businesses to offset the AMT and a portion of the payroll taxes. That's a very key factor in the R&D because it previously was not allowed to do that. So AMT oftentimes restricted the amount of the deduction that you could take, and also it did not apply to payroll taxes, which is considered an expense under the proposed legislation. With 179D, the deductions were increased in the recommendation up from 180 to a higher number, and it would be extended again for 2 years to the end of 2016. In addition to public buildings, the extension would be modified to allow nonprofits and tribal governments. So if you're doing any work for nonprofits, churches particularly, hospitals, then you might be able to take advantage of those opportunities to take the tax deductions and allocate, as long as you can get the allocation from the nonprofit or from the tribal. Basically, this has not yet happened. It was, again, July 21st, the Senate Finance Committee approved the 2-year extension, and Congress has yet to act on it, and will probably not act until it returns to its session this fall. But because this was a bipartisan approval, we believe there's a very good chance that these will be extended. We are monitoring, or will be monitoring, any activity on the federal level, and when anything occurs, we're going to be sending out information to anyone who's interested. And that ends my presentation. I want to thank Business of Architecture for hosting this presentation. If you have any questions, that certainly we can answer them now. If you have any future questions or have any inquiries, please direct them to me by calling this number directly or emailing me at my email, rich@capitalreviewgroup.com. I guess, Angela, we can turn it back to you for questions.
Absolutely great. Well, thanks so much for that enlightening presentation. And right now, we'll be taking any questions. If you do have any, feel free to go ahead and write them in, and we'll get started. So one of the first questions that has come in is from Jennifer. And she has a question about the software. She says, can the software be proprietary software? We have a program that calculates the reduction as well as helps us design the most efficient lighting solution. Our lighting audit is imported, and we are able to use the software to help choose the most efficient lighting solution. Would that be something that would qualify?
Certainly. The cost of developing that software and any equipment related to operating that software is certainly a qualifying expense. The software is specifically noted as one of the opportunities. Again, I would say not necessarily just look at the software development, but look at the projects that you're using that software on, so that you can get obviously a much greater benefit. So yes, the software will qualify, but don't limit your thinking to the software.
Great. We have another question that came in as well. Is the EPAC available for tax deductions right now for the 2015 year?
It is not. For projects that were completed in 2015, no. However, if you're on extension for 2014, or you have projects that were completed prior to 2015, those projects may qualify and can be certified, and you can take the tax deductions and carry them forward into 2015. So if you had a project that was completed in 2013 and you did not take the tax deductions for that, and it's certified, then you can go back, if you're an architectural firm, and you would have to do a tax filing amendment and take that benefit In that case, you would get a refund that you could either take as a check from the IRS or apply it to future taxes, which in this case would be 2015 tax filing.
Excellent. So another question, this is also from Jennifer. If a commercial building had a lightning retrofit in 2014 and did not take advantage of the impact, can they go back and amend it?
Say that again?
If a commercial building had a lighting retrofit in 2014 and did not take advantage of the impact, can they go back and amend it?
Oh, absolutely. Yeah, in the case of a commercial building, the owner of the building would not have to do a tax amendment if they've already filed their 2014 taxes. They could do a simple change in accounting method, which generally we prepare with the study and present that to the tax preparer for that firm. So yes, definitely. And they can go all the way back to 2006 and look at projects that they may have done. We have actually seen where lighting improvements may have been going from metal halide to T5 high bay in a manufacturing facility that was done in 2008. And then they turned around and did an LED improvement in 2012, and they were able to take the deductions for both of those improvements in 2008 and in 2012, if they met the standards, obviously.
Excellent. Well, that is good news. Any other questions? Keep them coming. Feel free to go ahead and type them in. Here's another question, actually. Is it possible to take the research tax credits and the 179D tax deductions for the same project?
Absolutely. We encourage that. And we are currently looking at several firms that are considering both those options. It gets a little complicated in terms of the taxes because both reduce their obligation, and when done simultaneously, the effect is much greater on their tax obligation. So we actually encourage them to do it at the same time. The return on investment for the expense proves to be much higher when you look at both at the same time.
Great. All right, another question. Is there minimal square footage that makes sense for a project to be considered for the 179 decertification?
There is a point at which we think the return on investment is critical. And generally for a whole building, we consider 25,000 square feet for 179D. For lighting, 45,000 square feet. But we've done projects for less than that. We're actually considering one now, a whole building for 19,000 square feet. And we've done other projects. It all depends on the tax situation of the client. We had a client who was putting kids in college and needed to reduce their income to qualify for financial aid. So they asked us to prepare a study that normally we would recommend against, but after talking to the CPA and the client, it was determined that the reduction in income that was created by the 179D project put them into a situation where the benefit that they received for financial aid was greater than the cost of the or the expense of the study. So they decided to go ahead with it. So we look at, that's one of the reasons why we like to talk to the financial advisors to see if there are special circumstances that make sense for completing a study, even though it falls below those minimum square footages. So we encourage our clients to have us look at any project. It doesn't cost them anything for us to review it, to tell them whether it makes sense or not, estimate or to tell them what the expense of the project would be, and then they can make a decision with their tax advisor to determine if it makes sense.
Excellent. Great. Well, we have another question come in. How do people get a copy of the PowerPoint presentation?
Okay, well, two things. One is that I like to do the presentation in person, so I'm open to invitation to make a presentation to any firm within reasonable travel distance from the Northeast, where I'm located. We do have people located in other areas in the country, and I could pass that along to them for a in-house presentation. If that doesn't work, you can email me a request, and I would be very happy to send a copy of the PowerPoint presentation to you. Again, my email is up on the board right now.
Great. Denise, well, any other questions? I'll hang on for another minute or so.
Everyone, just wanted to drop in here. Rich, thanks for that great presentation. Enoch here. I was actually on another webinar this morning. Somehow we got double booked. I had to present one, but I'm here in Hawaii, so it's a little bit early in the morning. It's about almost 8 o'clock now. You might hear some kids in the background, but I just wanted to drop on, Rich, and say thank you for presenting to our audience here at Business of Architecture. These kind of, knowing how to get the best out of the tax credits that are available is great information. And I see a number of people on here that I recognize. Tim, good to see you on here. Nicole, Leonardo, good to see you on here. Leo, Jennifer, Elizabeth, thanks everyone for joining us. Amy, and anyways, I just want to say hi, continue on, and hope everyone enjoyed the presentation. Thank you, Rich.
Thank you for the opportunity.
Excellent. Well, I don't see any additional questions come in, but thanks so much for being here for this webinar, and enjoy the rest of your day. Thanks so much.
Bye, everyone.
Bye.